Well, CLSA today has come out with a very interesting note on the Indian market. It's a strategy note that CLSA has come out with, and CLSA actually is striking quite a cautious note as far as Indian equities are concerned. What CLSA is saying is that it appears as though market is pricing in a very aggressive recovery. CLSA states, along with examples, that market positioning at this point of time is quite aggressive. CLSA believes that if you're talking about how the relative valuation of defensive stocks, namely IT, Pharma, FMCG, the relative valuation or the relative positioning is at almost a decadal low, and which is why they believe that markets at this point of time are positioned quite aggressively. They believe market is not really pricing in the rising number of coronavirus cases in some of the key states of India, especially Maharashtra. Maharashtra cases are rising quite significantly, and they believe that this could pose risk as far as the entire recovery trade is concerned. Also, what they're saying is that the valuation premium of defensive stocks, and when you're talking about it on a relative basis to the Nifty, is near a 10-year low. Also, what they're saying at this point of time, it is actually becoming quite difficult for them to go ahead and find pockets of value as far as Indian markets are concerned. Why is it? It is simply because they believe that the Nifty PE valuation is at a record high, and due to this, they actually believe that pockets of value is something that is quite tough to find. They say at this point of time, pharma, consumer and power sector are at attractive relative valuations when you're looking at the rest of the market. And however, once again, they do say that market is ignoring the risk linked to the recent spike as far as COVID-19 cases are concerned. What CLSA has done in their focus list is that they've gone ahead and replaced both DLF and Ultratech. Both of these stocks have run up quite significantly ever since they were in the focus list of CLSA, and they've replaced it with Mahindra and Torrent Pharma. Now, also what CLSA is saying is that the premium of IT index within the Nifty is something that is quite average. However, what they say is that the defensive nature of the sector actually makes the risk reward quite attractive as far as IT index is concerned. So overall, to put it into perspective, CLSA does believe that markets are quite aggressively positioned. They believe markets may be ignoring the risk due to the rising number of COVID-19 cases. They are saying that any further lockdowns within India, localized lockdowns, localized shutdowns, or even lockdowns across the globe is something that may actually hamper the progress or hamper the earnings recovery. They are liking Mahindra and Torrent Pharma on the back of the fact that they believe further upside is possible for both of these companies. At the same time, they've removed DLF and Ultratech from their focus list.